CNBC-TV18.
Hi guys, a good afternoon and welcome to the CNBC-TV18 Mumbai newsroom. I'm Pavitra. With me is Ekta. You guys are tuned into your stocks. And for the market, this is looking like quite a good-looking screen. You know, it is 150 points higher on the Nifty. The Nifty Bank has seen a little bit of a weakness come in after the policy, but all in all, this is a good screen for us.
Hi, Pavitra. Yes, absolutely. You know, it is that 25 basis points hike which is coming from the Reserve Bank of India. They've raised rates by 250 basis points cumulatively since May of 2022. So the hope is that maybe this could be the tail end of what the RBI could do in this rate cycle. But nonetheless, for the markets, yes, it's positive. We have the mid-cap index, which is up around 0.8%. We have Symphony numbers, which are on your screen at this point. Net profit, which is up around 85% on a year-on-year basis, come in at a cool 39 odd crores, and a revenue growth of around 30 odd % plus as well for Symphony. Margins, I think there has been some amount of stabilization in terms of margins. The EBITDA is up over 45 odd %. So overall, it's a top-down beat that you can see for Symphony, and the stock, as you can see, is up 12.5 odd %, reacting to what has been a good solid set of numbers on the revenue, profit, and the margins have improved on a year-on-year basis. But let's talk about a couple of more numbers. We have IOL Chemicals, which we are tracking this afternoon. It's on our radar on the back of its third quarter numbers. The company did post a sequential recovery in margins along with growth in profits. However, the chemical segment continues to remain under pressure. To discuss the quarter gone by, we have with us the CEO of the company, Sanjay Chaturvedi, who's with us. Sanjay, hi, welcome to the show. Well, you know, I'm going to start by talking about the margins, because at one point in time, the company had indicated that y'all will probably reach margins of around 15 to 20 odd %. You have seen an improvement of around 200 basis points on a sequential basis. Tell us what went on when it came to margins in terms of input costs, product mix, and can you reach back to those levels?
Thank you for asking that question. You know, clearly we've seen an improvement from about 6-7% inching towards 10%, you know, this quarter. And we will certainly, you know, the trend line will continue, and we will go down the path of achieving the numbers that you talked about. You know, whether that happens in just one quarter or a little more, that remains to be seen. And you were right in pointing out, you know, the product mix has to change, because clearly what brought down our margins earlier was the chemicals business, where we were being dragged down by input costs as well as, you know, logistics costs as well. And given that the key raw material is all imported, we've got some new strategies in terms of managing that, and that you see reflecting in certain improved numbers for our Q3. And we are very, very confident that Q4 and beyond, we will hit profitability numbers that are consistent, if not better than the industry.
Okay, you will hit profit numbers which are better than the industry. Sanjay, thanks for joining us. But on the margin front, like Ekta was pointing out, you had guided for 15 to 20%. Do you see that happening, you know, in the coming few quarters?
You know, 15% is possible. I think 20% might take certainly more time to get there. A lot of our products are such where our profitability depends on the pricing, and some of these products that we have, whether it's an ethyl acetate on the chemical side or you know, paracetamol that we started last year, there's been tremendous pressure on the pricing there as well as on metformin. But we do see those pricing pressures easing off. So our margins will most certainly improve. But I want to be cautious here and not give out numbers whether it's 15 or 20%.
Okay. So you indicated that there's pricing pressure when it comes to paracetamol as well as metformin. Paracetamol, the pain drug, metformin, the diabetes drug. Can you tell us how much of price pressure you faced and what is taking place in the ibuprofen market as well?
Okay. So if you look at, you know, last couple of quarters, the paracetamol prices that were domestically in the, you know, 700 rupee range have corrected to about 550 rupees or so. Whereas on the metformin side, you know, what used to be a standard of $5.50, $6 is now below $5. So that certainly plays an impact. And on the ibuprofen, we feel that the pricing pressure is now stable, and the price has really bottomed out. And we actually see a recovery both in terms, certainly in terms of volumes, where we will be improving our asset utilization in the coming quarters. And with the prices being stable or marginally up, the quality of that business will certainly improve.
Okay, when you say ibuprofen prices have bottomed out, can you just explain that to us, and what can we expect in the next couple of quarters? I.e., what is the utilization level at this point in time? What is the kind of inventory that companies have?
So, we maintain pretty modest inventories. We don't try to maintain very high inventories, particularly for products where, we are fully backward integrated. So our assets are currently running well north of 80% in terms of asset utilization. And we will be hitting, higher numbers this quarter and the next quarter as well.
All right, got that. That is on ibuprofen. Can you also take us through what's happening with the chemical segment? Because we are seeing pressure continue there. I know that the EBITDA losses come down, but it still seems to be under pressure. So can you tell us what is the outlook for just the chemical sector, and how long do you expect this kind of pressure to persist?
I wish I had a crystal ball and I could gaze into it. Because let's look at the origin of the pricing pressure. The pricing pressure is really determined by the price of the raw material, which is acetic acid. Now, acetic acid, last year, as you know, was well north of 55 rupees a kilo, and now it's come down to around 40 rupees or so. The pricing of ethyl acetate is certainly governed by that. And as the two things kind of track each other, and the moment you see inching up of prices for acetic acid in the global commodities market, you will see inching of ethyl acetate as well. But having said that, we've got good sourcing strategies in place. So what we are going after now is trying to keep stable margins in the business, maintain a delta between the acetic acid and the ethyl acetate prices. And that delta should remain as the price of raw material goes up and down. And that will help us in removing the volatility and the sustainability of this business.
Okay, just a quick word. Based on what your Q4 is panning out to be, are you seeing any sort of green shoots when it comes to, say, the chemical business, as well as your margin improvement on a sequential basis? Just these two segments, the chemicals as well as the margins in Q4.
Yes. So, on the chemicals business, certainly ethyl acetate is our flagship product, but we have a few other products as well. We are changing the product mix a little bit, and that will play out in the new financial year. So, the chemicals business will be stable and give modest profitability. But overall, I'm very happy to say that on the pharma front, our API business has done pretty well. Our non-ibuprofen portfolio that actually used to be a very minor portion of our business till a few quarters back. In 3 quarters, we've already delivered numbers that we did for the entire financial year last year. So the non-ibuprofen API portfolio is growing very well. And we expect all of this with the improvement in the ibuprofen business as well to result in much better numbers for Q4 and beyond.
All right, much better numbers for Q4. Sanjay, thanks a lot for joining us and taking us through the outlook for IOL Chemicals. That is the management. This time, it is the pharma business which has done well. And like we were pointing out, the pressure in the chemical space has really continued. The margins, of course, they are saying will pick up. They'd earlier guided for 15 to 20% margins. Now probably saying that 15% is achievable. But I don't think they want to comment and give us an exact figure there. We are going to get into a short break now. But as we do that, here's some exciting news for you. The most coveted leadership awards are back. CNBC-TV18 honors the visionaries behind outstanding businesses. So catch the most influential, credible, powerful IBLA jury on the 8th of February right here only on CNBC-TV18.